It's a good question. It sort of is the question, and I think the answer is it's too soon to say. I mean, obviously, as Kate just said, the macro outlook, for riskier assets in general is not great. Still, the era of free money seems to be over, and so I think we're just going to have to take it day by day, week by week. Listen, for us in the space, we've been through this before. Our company's been around since 2018. We have the muscle memory, as someone said the other day, for when things get hard. And so I think that the key for us is to focus on executing and focus on the long term. And if you go back and you zoom out, still over the long term, crypto and Bitcoin in particular is still one of the best performing asset classes over the last 5 to 10 years compared to everything else.
Peter, 4 years maybe makes you old in your space, but 4 years in the context of a 40-year bond bull market is nothing at all. Do you think we understand exactly what crypto assets will do as we see this huge shift in the direction of interest rates?
Yeah, it's a really good question. I think, again, it's too soon to say. I mean, there was a theory out there last year that 2021 was a super cycle, that it was different from previous cycles, that were more attached to the halving of Bitcoin every 4 years, and and this was going to be something different. I think what we do know now is that the crypto space, the Bitcoin space, is more complicated than it was 3 or 4 years ago during the last down cycle. And so there's more traders out there. There's more factors. There's more derivatives. And in many ways, it's a space that's really matured a lot. It still has a long way to go. But I think, again, it's too soon to say as to exactly where we stand in its maturation factor. I still think of the space as kind of a teenager that's growing into young adulthood. And so there's going to be volatility, and that's kind of, as everyone knows, that comes with the territory.
Can I ask you about what we're learning from this phase about crypto? Because for a long time we were told that maybe they're an inflation hedge. We were told that they're non-correlated to other markets. What Kate's package suggests is actually there's quite a high correlation to market hours in the United States, and that actually you haven't been protected through this inflationary period. So what do we understand crypto assets being for, Peter?
Yeah, it's again another good question. I still think that Bitcoin is gold 2.0. I think that as we go down, the line, as we go into the coming quarters and years with Bitcoin in particular, you're going to see it start to act as that inflationary hedge. I think it could be off a lot more if it didn't have a lot of the properties that it has. The fact that there's only 21 million that will ever be produced, the fact that it's decentralized, the fact that it's not attached to any particular, governments, it's permissionless. All of the kind of factors and properties that we love about Bitcoin. I think as the space matures, as the asset class matures, you're going to see Bitcoin truly grow into that, hedge against inflation, and that what they like to call gold 2.0 or digital gold. I don't think we're there yet, but I think it could be a lot worse if it didn't have a lot of those properties that it.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.